AI stocks are everywhere. Every headline sounds the same. Artificial intelligence is changing the world. Chip stocks are soaring. Big tech is spending billions. Someone online says they doubled their money. And then you look at your own account, nothing? Maybe you never bought. Maybe you bought the wrong stock. Maybe you sold too early. Maybe you finally bought after the chart already looked like a rocket. So now the question feels personal. Did you miss the AI stock boom? AI feels different because it is not just a stock story. It is a work story, a job story, a technology story, a future story. When AI stocks rise, you do not just feel like you missed a trade. You feel like you missed the future. The problem is that headlines arrive late. By the time everyone is talking about a boom, the easy part may already be gone. The headline tells you what already happened. It does not tell you what happens next. This is why the market can be up while your account is flat. An index is not the same as your portfolio. If a few giant AI-related companies carry the market higher, the headline says stocks are booming, but your account may not move the same way. Another trap is buying the story instead of the price. AI may be real. A company may be important. The technology may change industries. But a great story can still be a bad trade if you pay too much at the wrong time. You can be right about the future and still lose money in the stock. Stocks do not only price dreams, they price expectations. And when expectations get too high, even good news may not be enough. The chase usually begins with regret. You see the chart. You imagine what would have happened if you bought earlier. Then the regret becomes pressure. If I do not buy now, I will miss the next leg too. That pressure is dangerous because now you are not making a plan. You are trying to erase the pain of missing out. That is how people turn a missed rally into a bad entry. Some people do the opposite. They never chase. They wait for the crash. That sounds disciplined, and sometimes it is, but waiting for the perfect entry can become another way of never investing. The stock falls 10%, and they wait for 20. It falls 20, and they wait for 30. Then it rebounds, and they say, it is too late again. Waiting can feel smart while quietly keeping you on the sidelines. The real question is not, did you miss it? The real question is, what role should AI play in your financial life? For most people, the answer should not be all or nothing. You do not need to bet your future on one hot stock. You also do not need to pretend AI does not exist. The smarter question is position size. How much can you invest without ruining your life if you are wrong? A better approach starts with a base. Broad market funds, retirement accounts, emergency savings, debt under control. That base is boring. But boring is what lets you survive exciting markets. Then, if you want AI exposure, make it a controlled slice. Not rent money, not emergency money, not money you need next month. A slice. If you feel like you missed the AI boom, do not punish yourself by forcing a trade today. Start with 3 questions. What do I already own? How much AI exposure do I already have? What rule will I follow before buying more? Rules are boring when everyone is excited. That is why they matter. You can dollar cost average. You can wait for a valuation you understand. You can buy a diversified fund instead of one name. Maybe you did miss part of the AI stock boom. That happens. Every investor misses something. The danger is not missing one rally. The danger is letting regret control the next decision. AI may keep changing the world. Some stocks may keep rising. Some may crash. Nobody knows the clean path ahead. But you can control your process. Build a base, size your risk, and avoid betting emergency money. Do not chase just because the chart hurts your feelings. The goal is not to be early to every boom. The goal is to still have money, patience, and a plan when the next one comes.